Welcome to the Dakota Housing Network. This is Joe Sheehan with the Mortgage Guys and
Dave Flohr. And
me too.
And Jim Walsh running the board as
Where
always.
Where is Mr. Larson today?
He's out doing realtor stuff.
Oh, he's
apparently.
taking a break.
I don't know.
For him.
Yeah, I'm not sure what Greg. He said he wasn't going to be here, so he's not here.
Business before pleasure.
Business before something like that.
It's Merry Christmas.
It's Merry Christmas time. He can take time off.
That's right.
He probably getting together with his wife. They're probably because he won't see her much.
Won't see her for a while.
Well, I know.
She's
a
state senator. She'll be busy
got a
the
new
next.
gig.
She'll be busy the next 4 months or so. So he won't see too much of her probably. So maybe they're having a nice time together. We can only hope that.
He's actually pretty involved too. He's on several committees, and now this year he's appointed by the National Association of Realtors as the representative to the Kevin Kramer's office. So I mean, between everything, he's dang near just as busy at the Capitol as she is.
I think so. Yeah.
Before it's all said and done with.
Yeah, and then with all his water stuff and all that. So he's
to a credit as a credit to the State Association of Realtors. They are very proficient at knowing how to get things done in the state legislature, and they're very good at writing things to succeed.
Yeah.
And so when it's amazing how much they get leaned on or how much people try to bring them into things.
Sure.
Because they're so good at getting things passed. And so, I mean, the bankers do it all the time. And I don't mean to pick on the bankers, but the realtors are better at it. And so like when you have a banking issue, even the first phone call you pick up the phone and you call the head of the political affairs committee or Jill. And used to be Nancy. For a long time it was Klaus.
Yeah.
And the first thing you did was pick them up. And it was funny Klaus was because I was on the political committee for a while for the state association, and Klaus it was just hilarious because he had that German, I don't know if it's German or Austrian, but it's that accent. And every time he goes, no, this never worked. This will never work. They got to completely rewrite the whole thing. They got to completely rewrite the whole thing. I don't know how they think they're going to get this passed. I don't know how they think they're going to get this passed. We're going to have to write the whole thing for him. And sure enough, it was incredible. They're very, very, very good at doing it. So I'm sure a little segue there that Greg will be busy and all kinds of other things that have to do with. The one thing I know was that there were, and I don't know if it's a legislative issue, but I know it's certainly something that has to be taken care of at the Secretary of State's office, and that is the e-signature piece of e-closings and the electronic mortgage.
Yes.
So
they need. Well, I think
I know Nick Hacker's working hard on that.
I think when we had Nick on earlier this fall, we talked about that, and I think he said it's there, and it just needs to have the rules written.
Which I think is the Secretary of State's
Which
office.
is the Secretary of State's job.
And now Klaus isn't around to write them for him. So
Al, yeah. But I believe it's okay as far as the law goes. It's just you got to write the rules for it. What's acceptable, and you get into the e-notary thing and all that. You got to write that too, I suppose. So
Yep.
So anyway, Joe, what are rates doing this morning?
The Freddie Mac primary mortgage market survey says 30-year fixed rate 4.55%, 15-year fixed rate 4.01%. So they are technically.
Where are they at?
Not bad.
Not bad. They keep going down a little bit.
Yeah, a little bit.
Yeah.
Yep.
Well, the trend since October, is down since October, so we're basically 2 months of lowering interest rates. Not probably fast enough, maybe for you. Refinancing would be a boom.
I told you I want rates to go up, not down.
Oh, okay, all right.
These rates are unrealistic. They've been unrealistic too long, and it's a part of the issue with house prices normalizing and
well,
I mean we should be paying
a little more. No, the Fed
rates.
had their meeting last week, right?
Mm-hmm.
And
they raised them. Mortgage rates went down.
Raised up, which was already kind of baked in the market already.
And now they're saying that they're not going to do it
Not 4 times, but maybe 2 times next year.
Well, now they've completely pulled back, saying that he's not going to raise at all.
Yeah.
That he overbuilt this time.
Yeah.
And they overplayed their hand this time, and now that there's no way they're going to raise them in 2019 at all.
Oh, I just saw the guy, the CNBC guy, Jim Cramer, the stock guru, said Powell should have kept his mouth shut. That's basically what Cramer said. In that he had to realize what his words mean. They're very powerful, and the markets take it and run with it. Basically, is what he was saying. But he said Powell should probably just be quiet. It's a time to be silent, is what Cramer was saying, as far as rates go. I don't know. It's tough. It is a tough call for the Fed to make on what do we say.
So you can't win. So back in the days of Greenspan and the guys before that, the Fed never told you when they were what their plan was going to be. They never forecasted their interest rate raises. Paul
Volcker, back in the 80s, he just came on. He just did stuff, and he didn't tell. I don't think he didn't tell anybody.
I'm not even sure if the whole committee knew.
Yeah,
so then you get into the day of Bernanke in the middle of the financial crisis.
Yep.
And then everybody wanted Fed transparency.
Yeah. Okay.
So now they have Fed transparency. Now they don't like it.
No. Yeah. We wish they keep their mouth shut.
Yeah, now we want them to go back to not being transparent.
Yeah.
Keep their mouth shut.
It's there because he blamed the big stock market decline here in the last couple months to what the Fed has been saying since October.
But nobody says that the Fed's wrong.
No, well, except for Trump.
Right.
The president says, what are they doing? They're ruining the economy.
Yeah, well.
I might have to fire that guy.
Yeah, you might have to. I don't know.
But I just saw something the other day where one of his advisors, the president's advisors, came out and said, "No, Chairman Powell is safe at the Fed. We're not going to do anything with him."
I don't know who you'd get. You could go back and hire Yellen.
Yeah. Well, Greenspan likes to spout off every once in a while. Maybe they could hire him back. Oh, jeez. Yeah, I don't know. Yeah, I'm not sure who you'd get either.
I don't know. The Fed's got a tough hand to play here. You have signs of a global slowdown. You do. You have, but you have an American economy that wants to go.
Yeah,
it really wants to go, and at the same time, there's no sign of housing, and I'll come back to this. If the economy is growing and he can raise rates, if I was sitting in the Fed chair, I'd be doing the same thing.
Absolutely.
Because when the recession happens that you can't control, you went to Congress last time for help? Your predecessor,
and nobody gave it to you.
went to Congress for help and didn't get it. So
we can continue this again.
My toolbox.
Yeah, when we come back from the break, Jim, what are we playing for tunes today?
Let's do the Rolling Stones.
The Rolling Stones. Keith Richards is still alive. All right.
We're not ready.
We're not ready yet. Well, we'll be back. Wait, Joe, we're going to talk about, we got a little something on flood insurance.
Yeah, flood insurance.
Of course, the government shutdown and how it's affecting the mortgage industry to date we can discuss. So, all right, Jim, we are ready to go. What are we playing?
Sympathy for the Devil.
Oh, that's a good one. Okay.
Currently, it's 10 above.
Dave Ramsey is heard here. SuperTalk 1270.
Yeah, welcome back to the Dakota Housing Network with Joe Sheehan here from the Mortgage Guys and
Dave Flohr.
All right, well,
It's not easy.
From the Stones.
Rolling Stones.
All right, it's not easy.
It's
not easy being a mortgage lender.
It isn't.
We're a realtor.
Yeah. Well, we didn't get to our mortgage market guide.
Yeah.
So Bill Botner from Mortgage Market Guide.
And
what has he got to say? He's saying lock them if you got them.
All right.
Locking bias over the next 30 to 45 days. U.S. stocks blasted off yesterday, fueled in part by extremely oversold conditions, low volume trading, strong holiday sales, and after the White House said that Fed Chair Powell's job is safe. In a low volume trading environment, prices can be pushed around more easily and lead to big moves, especially weeks that are holiday shortened with many traders on vacation. The Dow closed with a 1,086-point gain and biggest one-day point gain ever and came after the worst Christmas Eve losses ever. Bond prices are modestly higher in stock weakness, but as we saw yesterday, it's not where they open, but where they close. And the yield on the 10-year Treasury is at 2.75 after closing at 2.8 yesterday. In economic news, weekly initial jobless claims came in at 216,000 as they hover near the 50-year low. Consumer confidence will be released. Just probably came out.
I saw it. It was down.
Down? Okay, we'll go and look at it on the next break. Will not be released. Let's see. So the Treasury will sell. Big auction coming up. $32 billion in 7-year notes coming up. And technically, the bond continues to trade near resistance, supplied by a 200-day moving average. And so basically, that's why they're saying lock them if you got them.
Yeah.
That interest rates are hitting. The good interest rates are where they're at, probably hitting headwinds, and we're probably likely to see the stock market strengthen a little bit.
There's been so much volatility lately, and I think that's probably where Bill's coming from. Is like it's going to like slow down here, that volatility, and you can't be sure what. Like you said, it's got headwinds to go lower. Rates do, and that's unlikely going to happen. So the issue probably is they probably aren't going to tend to bounce back.
Well, these average rates coming out of Freddie Mac's primary mortgage market survey though do make Bill Bodner's predictions. I think the average rate for the year will have to come in decidedly under 5%.
Well, we're 4.55 for a 30-year. Okay, so they got to go up over 0.5% just to get to 5, and Bill said, hey, it's going to be below 5 through till 2020.
And we're at 4.050 on the first home program.
Yeah,
with North Dakota State with North Dakota Housing Finance Agency.
I don't think we're getting to 5. I know that.
Yeah, I'm sure you're not.
There's something really bad. It's something really happened if we get to 5 sometime this year.
Well, it goes to speak to the quality of your bond, though.
Yeah,
you have a high investor demand if you're able to keep the yield that low.
Yeah. Investors like North Dakota stuff because it's not very volatile. Put it that way. So folks, again, interest rates. Don't worry about trying to get a lower rate at this point. It's not going to move that much to make a difference for you. So just lock them up. So, Joel, last week we talked about government shutdown and what effect it would have on the mortgage business. We talked about rural development, where lenders will still be able to do the rural development guarantee loan because most investors will buy those loans without the conditional commitment being there, just knowing that rural development will come back and issue those once they open up again, and everybody's fine with that. FHA is shut down for the most part, especially if you need to talk to anybody. You're not going to get a hold of anybody.
FHA connection is
down.
Down.
So there's not a lot that can be done with FHA loans the last 5 days here. And thankfully, this did happen over the Christmas vacation, so there isn't a lot of activity anyway. But it could put a kink in things the longer this shutdown goes on. No, one thing we talked about last week too, flood insurance program, what the effect would be. I think we kind of thought, well, there wouldn't be one, but the FEMA came out with an announcement this week, and it said that FEMA issued this on the National Flood Insurance Program. Policies that were in force before midnight on December 21st, which was when the shutdown started, remain in force. They will process and pay claims under those policies as usual from the insurance fund, but they will not have any authority to borrow any additional funds from the Treasury if those funds would get depleted, which probably won't happen. Existing flood insurance policies remain valid regardless of FEMA's capacity to pay claims. FEMA and Congress have never failed to honor the NFIP's contract with policyholders. But here's where it gets interesting. You cannot issue new contracts for flood insurance during a lapse in authority unless Congress passes legislation reauthorizing the NFIP. Now, they did pass that authority. We got an extension until May 31st, I believe.
Mm-hmm.
So I think that means they can issue new contracts according to this, but during any lapse in authority, the NFIP will have limited ability to issue new policies, issue increased coverage on existing policies, or issue renewal policies. So what the FEMA is saying is that even if your renewal comes up, we're not necessarily going to be able to do this. But I think if they reissued, if Congress passed that bill, didn't they do it like Tuesday or Monday or over the weekend, where they did give the NFIP additional authority through May? So that kind of counteracts what FEMA put out here, I think.
Yeah, our understanding was
confusing.
anything in place wasn't going to be
Right, and that's what they're saying.
That's what Greg said. And
they're good. Yeah.
But unless that changed, unless that's the change.
Yeah.
But last word we had heard, with Greg, who I consider
he's
definitely mine.
He's going to know. Yeah.
I mean, because he lives that war every year.
Yeah.
But my understanding is that anything in place.
It was good.
Was good.
Yeah, and that's what they're saying. But it was the issue here is if you have to get a new policy during the shutdown, when the government shut down,
right,
you may not be able to get. So that could put off a closing.
Anything closing in the flood. If you have a closing and you're in the floodplain, you may want to find out if this affects your closing or not.
Exactly. It's a question to ask your lender about.
Can your insurance agent get you?
And the agent, yep.
Get you flood insurance.
Absolutely. So if you're in that situation, definitely check it out now.
This could get messy. Like right now, I mean, I guess my understanding is the non-essential services stuff won't really get messy unless they don't get a spending resolution by the summer.
Yeah.
That's when the government truly runs out of money. So what happens is that this is reducing money every day that goes on, but that we don't really run out of money till the summer.
Yeah, there's the debt authority for the government runs out sometime this summer, and they need to raise the debt ceiling. Is the question, and if they don't, then the government will be out of money, and then they start scrambling for, where do we get it to pull in, which makes it unlikely anything that they'll get rid of Fannie and Freddie, because they take them out of conservatorship, because Fannie and Freddie's the one agency making a whole bunch of money for the government to the tune of billions of dollars every year. So,
and that's a good point. Like, I wonder how much, no different than any of these scandals that come up, how much stuff doesn't get done because you keep replaying the same. So you have a government shutdown. Yeah. All the energy goes into the government shutdown.
Yeah.
So I mean, thank God I disagree with agency reform. It's a good day for all of us to think the agencies are reformed and successful the way they are.
Yeah.
I mean, it's a good day for us because they don't have time to mess with them. But there are still other things that need to be fixed. How many things don't get fixed, don't get dealt with because you're arguing about whether or not we should even,
Well, okay, so this is over the border wall. Okay, what's going to be acceptable to the president as far as funding goes, and what's going to happen? So, is this going to drag out? Because you're going to have a turnover in Congress here real quick.
I just want to point out, I thought Mexico was going to pay for the wall.
That's what I think I heard that at one point. I think I heard that.
I don't even know why we're fighting about this.
Yeah.
I don't even know why we're fighting about it. Wall or no wall, I really don't care. I mean, because I don't understand the issue of the wall at all in terms of I don't know if it's good or bad. Like, I hear arguments. People say wall doesn't stop anybody. Yeah. I mean, every Mexican I've heard talk about it says you build a wall, then we'll build taller ladders. Yeah. I mean, I hear that joke all the time from Mexicans. And so, I mean, I don't know. Like, I hear the wall will help. It won't help. I don't know. All I know is Mexico is supposed to.
That was the original plan anyway.
That's the only thing I know.
And the problem is, is getting distracted over whether border security. Sure, that's important and everything, but you get distracted, and I'm afraid that Congress could get distracted about other things, and other, like you said, things don't get done.
Hey, you go back to the Clinton scandal around Monica Lewinsky.
Yeah.
And what were we not paying attention to?
Exactly.
Al-Qaeda.
Yeah. Late 90s.
We were all locked up in this affair.
Yeah.
And nobody was paying attention to.
Yeah. So like you just said, what are we not paying attention to?
Right.
Through all this. Yeah. That is definitely something to think about.
Give me shelter.
All right.
And that's what's happening for Fannie and Freddie. They have a little shelter right now.
And we need shelter today. It's going to be cold out there.
We are going to need shelter today.
Currently, it's 10 above.
The Red River Farm Network. Ag News is here on SuperTalk 1270.
All right, Jumpin' Jack Flash on the Dakota Housing Network. Dave Flohr and Joe Sheehan along with Jim Walsh on the board. Talking a little housing today. Lock your rates.
Remember the first time we had the government shutdown? Remember how it was like we counted every
Well, we've had a
day?
couple of them, right?
Well, they had a clock.
The first one, though, we ran it like it was a countdown to Armageddon. It
Right.
was like day 22,
Yeah.
3 hours and 42 minutes,
Did
22
they-
seconds into the government shutdown.
Didn't they throw it up on the big board in Times Square?
Yep.
Probably.
Yeah, we
And now it's
talked
like,
about it every show, every blog, every video cast. I mean, we were talking about the government shutdown.
And now it's just like, oh, come on.
Yeah, please get this solved by now. I do think it potentially could become a problem.
If President Trump can be stubborn, we all know that, I think, and we'll see how serious he is about this and what he actually wants out of it.
He wants that wall.
Yeah,
Good or bad, he
but
wants the wall.
you've got the House of Representatives is turning over, come January 3rd. So it's going to be tougher to get something through
And
Congress.
maybe that's the reason for that.
Yeah.
I don't know.
Yeah, I don't know. We'll see.
I try to stick to mortgages. I try to stay out of the politics.
So let's talk about houses.
Yeah, let's talk about houses. There's something I know about. I know something about that.
Overnight, we got snow. It was pretty nice up until then.
Really?
Yeah.
Just a wee bit.
It decided, let's have winter. So,
Hey, they're partying big time at Huff Hill right now.
oh, yes, they
Oh,
were.
They love it. They love
That was awesome for them. They said they were getting about 100 people a day out there. Now yesterday was like 300 and
And
some.
they're saying most all the runs are open today.
Yeah.
They only had like 4 or 5 running at
Yeah.
one point.
Well, that came at a perfect time with schools being out and everything, and bam.
Yes.
It's great for their business out there. But it's winter, so I've got an article here, Joe, that talks about the 6 reasons why winter is actually the best time to buy a house. All right, so there's, first of all, less competition out there.
Yeah.
There isn't a lot of people out there trudging through the snow to
makes
look
sense.
at houses.
Yeah.
So there's less competition, meaning, it's, I call it a buyer's market or not. It probably is, because the sellers, well, if they really need to get their home sold, they'll probably cut you a deal, maybe. It depends. But you're not competing with as many other people. And then second one,
Lowers the pace a little.
yeah, sellers are motivated and willing to make a deal. So it depends what that seller's motivation is, obviously. But if they're looking, they're moving, they got their place down in Florida or Arizona or something, and they want to sell, they're motivated to get out of there. Now here's an interesting one. Number 3, you can put the house through its paces. So, you actually have the furnace running and you can see, how's it working, drafty windows, doors, all that good stuff, right? The only problem when you got a day like this is you can't see the roof.
Or air conditioning.
Or air conditioning is not going to work. Now, actually, the house we're in, we bought it in the winter, and we couldn't see the roof, and was covered with snow. Our house inspector did go up and took a peek at it as best he could. But yeah, you can't run the air conditioning, so okay, hopefully that's going to work. But so there are some good points about that, and maybe a couple bad things that you're not going to be able to see how they work. But look at like today is a perfect day. What's it going to be like to shovel the driveway and the sidewalks? You got a south-facing driveway or north or whatever. How does the snow drift in the spots? Like we have the way our roof is, or one that faces to the south. It just drifts over. It goes right over top of our front door off the roof. So I'm knocking snow down all winter usually with that. So those are little things.
Things you can think about.
Yeah. Hiring
all of a sudden a corner lot. Do you if you have walks going down both sides of your corner?
Yeah, it looks great in the summertime, but oh man,
it's a little bit of maintenance.
Yeah, a little bit more. And are you next to? You got your mailbox. if it's in front of your house, well, that's kind of your responsibility to clean out the mailbox for everybody. Hopefully everybody kind of share in that, but it's in front of your house.
All those little things.
The fire hydrant, adopt the fire hydrant. Well, if it's on your corner, everybody's going to look to you to clear that fire hydrant out. Yeah. So little things. Hiring movers is usually easier. Okay, they're not as busy, so just like the sellers, they're probably motivated to give you a nice deal on moving. You can enjoy last-minute tax savings, I guess, if you get it bought before the end of the year here. So you're losing time with that. But homes close faster. No, what do you think about that? Homes close faster. There's less competition. You think that makes a difference nowadays?
I think most years it's true to some degree until you get up to the holidays. So, like, where we're at, a lot of people. Actually, for me, I've always said if you have 2 loans or you have 20, it's what it feels like during Christmas because half the world's on vacation.
Yeah.
So you're trying to talk to somebody to get a verification of employment. You're trying to talk to somebody to get something from a title company. You're trying to, no matter where you call, somebody's not going to be in the office, right? And it just gets harder to get things done.
Yeah.
So I don't know that you close them faster, not over the holidays. Now, coming into January, maybe. But, we've started to get one of the things about the real estate population, whether it's appraisers, mortgage lenders, or realtors, is it's an aging population.
Mm-hmm.
It's, you start getting the average age of mortgage lenders is over 40, the average age of realtors is over 50, the average age of appraisers is up there too. These folks take a few weeks and they go down south. Some of them took advantage of the collapse and they bought some properties pretty cheap down there.
Yeah.
And they're spending more time down there. So I don't know that I've seen, certainly when we were at these booms where we were waiting 60 days for an appraisal, did turn times improve in the winter? Yes. Did they improve to the national average of 5 days?
No. Yeah.
So, yes, maybe.
So it's relative. Again, it's what your market is. Mm-hmm. And like you said, if there's in town here, like if 4 of the appraisers in Bismarck go to Arizona for a couple months,
or Mexico, or
wherever it is, they got a house down there, so I'll go down to Arizona for a couple months and escape the winter. Well,
even
they're not here to do the appraiser.
Even a couple weeks turns. A couple weeks turns it into a 21-day turn time on the appraisal.
Sure,
it still puts you at a 30-day closing. Best case scenario.
Yeah, so that doesn't really hold true up here, maybe so much.
Depends.
Okay. No, you mentioned something. You talked about getting verifications of employment, all that stuff. Government shutdown. Going back to that, IRS is closed down for the most part on getting tax transcripts, etc.
4506Ts on everybody.
Yeah, lenders have to get tax transcripts from the IRS. That is shut down. You can't do that. So right now during the shutdown, so that could cause problems if this goes on longer.
I think the last time that happened, they made an exception to it.
Did they? Okay. Most of like Fannie Freddie said, okay, you don't need that. Okay, but to date, haven't come out with anything.
No, not yet because they're not worried about it yet. But you're right. Yeah. Eventually, if this goes on much longer, somebody's going to have to make an exception to that rule.
Yeah. I guess you're less likely to get called on an audit at the moment because IRS is shut down, which would be a good thing for some people.
To turn in false tax returns.
Yeah. Don't do that.
I'm sure they go back, but the thing is, you're still going to sign the 4506T.
Yeah, you're going to have the borrowers sign
which means that they can always go back and audit the files.
Right. Yeah.
So I think they'll waive it.
Yeah.
They usually do.
Yeah. But it is something that
one more thing
to be concerned about. And so don't be surprised if the lender says, well, you know what, we got to push this off because of this thing with whatever government agency.
We're waiting to find out if we can close without this.
Yeah.
Which I'm assuming we will.
Yeah. Probably be okay.
I'm sure a Benchmark will close without it.
So anything else to buying a home like now in the wintertime that people you think should be aware of from your perspective as a lender?
I think even from sellers. I think from a seller point of view, some people say, well, I'm going to take my house off and put it back on the market in spring, which is fine. I'm not saying don't do that, but I'm saying if you really need to sell it, sometimes because so many people do take it off the market, as far as just getting it sold, sometimes less competition
Yeah.
in the winter.
You're the one out there.
You're the one out there.
And if people really want to buy a house, and that's, yeah, we'll take that.
You know,
one.
and especially if you have a really common house. You know, like if you have a house that is a typical kind of house in your neighborhood, and if there were a bunch on the market coming into the fall, now you're the only one. That's a way to get seen.
Yeah, exactly.
So
it's, you know, it's like, well, are you missing that one person that's going to come along and want to buy your house, and you missed them because you took your house off the market?
Yep.
So that's definitely something to think about. Okay. Also, home appraisals. Since we kind of talked about appraisals a little bit, how that can cause an issue up here with some people, just taking vacations, etc. Appraisals. We talked about it all the time on the show here, and how it can be an issue. But some home appraisal tips that people should expect. One thing, this is an article from House Logic. Home appraiser is neutral. They're like Switzerland, right, Joe?
yeah,
They're there just to give what they think the value is.
that's right.
And they're working for the lender on the loan, right? They're not working for the buyer or the seller. And people have to remember that. Do you see the appraisal getting any better as far as number of appraisers in the state? And we talked about difficulties with timing and having enough, especially like VA, et cetera.
Yeah, and that's something we should bring somebody. We should bring one of the appraisal members of the appraisal board on the show. I should see if I could get Kathy or Corey to come on.
That would be a good idea.
Because there are some new rules coming up that we actually have to get done for supposedly the certified. The real problem is the certified residential license. Yeah, because that's the one you need to do the FHA. Yep. And some or some of the AMCs have just gone to requiring you to be a certified
even
versus
put you on
licensed
the roster.
So it'll be interesting to see how there's some rule changes with that we're working on at the appraisal board that we have to. It's done. We just have to get the rules approved so that the path to that license is a little easier. Yeah. And I don't know if will that attract people in. The real problem with bringing appraisers in is the apprenticeship.
Mm-hmm. Yeah.
It's the liability the appraiser has to bring on an apprentice and promote that.
Yeah. Okay. Oh, we can continue this after the break here. Jim, what are we going to listen to now?
Street Fighting Man.
All right.
Currently, it's 11.
On Twitter, Facebook, online, and YouTube. SuperTalk1270.com.
All right. Well, hey, the last time for 2018 for Dakota Housing Network.
A little Auld Lang Syne.
And whatever you think, we'll be back in 2019.
Whatever
good or
you
bad.
think.
Good or bad, we'll be back. Anyway, we were talking about appraisals. Now I got another one. I thought this was this is from an article from House Logic. They put on what to expect during a home appraisal. But it says, be prepared to pay. Now, mostly times the buyer's the one paying for the appraisal. Yep. Okay. According to this article here, they were talking nationwide. Average home appraisal cost will be between $287 and $375. We could almost really double that for North Dakota, correct, Joe?
Yeah,
I'd say it's 600.
Oh, at least
plus.
No,
is what I see.
700.
Yeah.
750.
I mean, when I look in files, when we're reviewing or whatever, I see 600 is probably the lowest I've seen.
When you put in rush fees, the extra service fees, the final inspections, we're paying anywhere between $650 to $1,000.
Yeah, and then the further away you go outside of Bismarck or Burley-Morton County, it's will go up higher yet.
Well, we have a whole group of appraisers that live in Idaho.
Oh,
that fly out here.
They just come out here.
Fly out to the western end of the state.
Yeah.
So imagine what their fee has to be. I mean, they're obviously, so comparatively, they're, the fee they're getting from North Dakota must be a pretty good premium compared to what they're getting in Idaho to make it worth flying out to.
Yeah,
You know,
and still get business here. You know, so the cost. Yeah. So do they come out like on a weekly,
like once a month,
once
or
a
twice
month,
a month,
and then just bang out as many as they can for over.
do the inspections, and go back to their offices and send out the report.
They just come out for like a week.
Yep.
Probably
Do the
and
inspections.
do as many as they
pile
can.
up a
and
bunch of
boom.
orders that they're going to complete when they. Yep.
Okay. All right. So next one, appraisals take a while. You got to be patient. Where are we at now with timing?
Well, I a little different gig where to be on my appraisal list, you have to guarantee a 14-day turn time or 10-day business turn time. So mine are fast. But I would say they'll come in quick if the appraiser, if it's convenient for the appraiser. But I'd say that it's not 15 to 20 day.
Yeah.
range.
Okay. So they're better than they used to be
yeah.
by far. I mean, because we were talking like 30 days was normal before they even get out there to look at
days.
it. And 60 days for a while.
We were sending out orders for 60-day turn times and getting them returned to us.
Yeah.
Once upon a time.
Yeah.
Not anymore, but
yeah. Okay. So now you've got the valuation of the house. What does it mean? What do you do next? So when that appraisal comes in, let's say the appraiser's valuation matches the price you and the seller agreed to. Slam dunk, good to go as far as the appraisal goes for the most part, right? Unless there's, you could agree on the value, but if there's some repairs that need to be made, can always throw a kink in the process.
I can throw,
If the seller doesn't want to pay for them,
Yep.
et cetera. Okay.
If the appraisal doesn't come back as is, right?
Yep. Okay. If the appraiser's valuation is higher than what you're paying for the home, what do you say? Yippee, right? As far as the buyer is concerned, seller might feel a little remorse that
Seller shouldn't know.
They shouldn't find out.
Seller shouldn't find out.
Yeah, but if they did, they'd feel, oh, shoot.
Well, but it depends on how fast they want to sell the house.
Exactly. Yeah.
I mean, did they have to price it to sell? Or?
Yeah. No, if the appraisal comes in lower than what you've agreed to pay for the home, what options do people have?
Well, some places don't have any options.
Yeah.
I mean, you are just stuck with it. And in our case, like some places, like at Benchmark, we have an appraiser on staff to actually review the appraiser's work to see if it's did it comply with the USPAP? Is it the best information, the best comps? And you can now, like with VA appraisals, you can actually apply for a recertification of value. So like you can there's actually a process for that like it's the VA actually looks at it and determines if they agree with the appraiser. In any other loan, it's more subjective. In any other loan, it's a little more subjective. You have to typically what will happen is like in our situation, the appraisal desk goes back to the appraiser, says there's some disagreement. The realtors have additional comps. Why didn't you use these comps? Then you can then through the collateral underwriter, through the agencies provide information and comps.
Yep.
And you can ask the appraiser to basically defend the value they gave. And sometimes what happened is an appraiser will go, oh, I didn't know that, or I missed this comp, or some comps are not in the system. Like it might have been a private sale.
Right.
That was harder for the appraiser to find. And so in each one of those cases, sometimes the appraiser is not trying to bring it in. They're just as good as the information they can get. And the databases are not complete. The data, when you don't sell your house to a realtor, when you sell it off the market, sometimes you're burying that information, and those private sales aren't on the market. So you can do that. In the end, if a lender believes that the first appraiser missed the mark, like it's an issue of competence or technical integrity in the appraisal, then you could order a second appraisal to now. But my understanding is you can never just use the second appraisal.
Ah, okay.
That second appraisal is there to give you guidance on working on the first one.
So,
now, if you, as an owner of a company and or the head of underwriting, decide that you really believe that the other one is incompetence, you can throw it out. But you are taking a risk that Fannie or Freddie,
when you try and sell that mortgage to an investor,
no different than how would you guys perceive it? So let's say, for example, on the servicer side, do you know how you would handle that if I book a deal and I throw the first appraisal out, I send you in one with the second appraisal that came in higher, and if you wound up with either Fannie sending it back to you saying that they wouldn't accept it, or if it wound up in foreclosure and Fannie or the mortgage insurance wouldn't insure it, what would you guys do to me as the lending company?
Well, that's the trick. Is it ends up, if the mortgage is insured by, if it's FHA or PMI company, if they come back and they point to that as a reason why we're not going to pay a foreclosure claim, then as an investor, you're going to go back to that originating lender and say, we're not getting our claim paid here. We're going to, we'll sell this house, but when we have, in my opinion, how we would handle is we'll sell this house. If we incur a loss, we're going to ask you to pay that loss back to us. So if we lost $10,000 on that sale off of what our costs were, we'd come back to you and say, you need to pay this to us. Or we'd offer you, do you want the property? Pay us off in full and you can have the property.
And I think that's a generous offer.
Yeah.
I think Fannie.
You get it back.
Here
You're
you
done.
go.
It's yours.
And I think Chase, same thing.
Yeah, the MI company is going to say, we're not paying. Then,
so that's kind of one of the things where, it's tough.
As a lender, you can order the second appraisal to help the first appraiser maybe rework his and say, you know what, I was wrong. Yep. These are better comps.
You could overrule it, but you're going to take that risk.
That's a big risk for the lender.
You're also betting on that borrower because if anything goes wrong in that borrower's life.
Yeah. So as the borrower, if there's an issue that comes up and you say, well, what about getting a second opinion or a second appraisal? As a lender, you're going to be very reluctant to, we're not going to just toss the first one out because if I go to that second one, that can cause a problem for me down the road.
And here's the other problem. What happens if the second appraisal comes in lower?
Then you're shot.
Now...
And you...
I think our rules are we're supposed to take the lower of the two.
Sure. I wouldn't doubt it. Yeah. I'm not sure about that, but then what you need... the other option somebody always has is they can put more money down. If they've got it, they can come up with more cash and they can still buy that house.
And that's usually the problem is people don't have the money down.
And obviously as a home buyer, you like to think I'm buying something that's at least what the value is perceived to be, at least what I'm paying for it, rather than below it. If it's $500 or something, okay, I can live with that maybe, but it's hard. You're not just going to shell out some money to.
And the way to see that, I know there's disappointment because you wanted the house and we all want it to work out the way we want to dream it out. But truthfully, $700 to find out that you're not going to make $150,000 or $350,000 or $450,000 mistake is good insurance.
It is. Yeah, absolutely.
And if the value's in question and you got to argue about the value at all.
Yeah. That's a red flag problem.
Red flag.
Yeah. So you really want that house.
Because it doesn't happen very often, folks.
Right, it doesn't.
99% of the time, we're selling a house for $250,000, it appraises $250,000-ish.
Yeah.
I'm talking margin of error of $5,000.
Yeah. The realtors really know their business quite well.
They do.
When they list prices on a house. They do. They do. They know what's going on. So anyway, we're running up on the end of the show here, Joe. So
Happy New Year.
Happy New Year to everybody. Great 2018. Hopefully 2019 will be even better. And Jim is going to send us out on what Stones song here, Jim? It's only rock and roll. All right. Have a great New Year's, folks. We will be back next week.